morning, good afternoon, or good evening. No idea what time you're watching this, but it is Sunday, January 5 for you guys over there. Over there on the East Coast, over there in the United States, it's already Monday, 4:30, 5:30 in the morning over here where I am. And I have your reminder here on screen from our FOMC day just a couple of weeks ago. And that massive 6,000 puts trade, just under $100, that went to $12,490 within 3 hours time. The reason I have this up here for you is a reminder because during the course of this week, Jobs Week it is, we've got your basic economic data, which comes out daily. However, as we go into Tuesday with the JOLTS job openings, Monday being the anniversary of the January 6th treason takeover of the United States to overthrow the government. Total bullshit. Kamala Harris actually verifying that Donald Trump beat her. That will be something that everybody will want to be watching. We've got the JOLTS job openings on Tuesday, January 7th. On Wednesday, with the continued jobless claims, a couple of Fed speakers at 2 o'clock p.m., the FOMC Meeting Minutes will be coming out on Wednesday. So that is something that we will want to be paying very, very close attention to come Wednesday. A couple of Fed speakers on the Thursday nothingness. And Friday, you got your jobs report. And yes, for those of you who are unaware, all of the illegal immigrants, all of those military-age men who are acquiring work are counting in that jobs report. And that's the reason why you are seeing people who are saying it's hard to get a job, especially those Gen Xs. That's the way they're padding the numbers. So anyway, that is what's going on there. For most of you, being that I am scrolled in here on my 75 degrees at night, 85, 87 degrees during the daytime location over here in the Philippines, you guys are getting vortexed. And this this polar vortex that is going to be coming down on you during the course of the week as Lake Michigan is already partially frozen. This is going to have an impact, and because weather, listen guys, don't take this as biblical, weather does tend to impede on any kind of, volume in the stock market. This goes back to when human beings actually mattered. Tuesday looks like the day when it's going to be extremely hitting. And then later on Tuesday night, with Wednesday stretching down there into Atlanta, the northern tip of Florida. I don't think that you'll get what I remember experiencing back in Fort Lauderdale, Miami in the 80s when it was down to, I believe, 33 degrees one December morning. So weather's going to be an impact this week. That is what you need to know as far as that goes. And I have a very quick warning for you. I don't have an image up here for you. But at the end of this message, I'm going to be sharing a clip which will not necessarily make you money, but it will save you an enormous amount of money. I'm talking hundreds of thousands of dollars. So pay close attention to that at the end of the video. So anyway, here we go. Tracking on the SPX, and at the beginning of the year, it's always tricky because I have these rows that fall in between where I can see my break line. And for me to be able to calculate the ATR, the green closes, But as you saw there on Friday, kabam, 5 red closes in a row. You're getting a green close, and you not only got the green close, but you got the move right through the 50-day moving average and closed almost to the penny on that moving average. While we are on the screen, I want to point out to you that you have 2 green weeks in a row, and those weeks are dojis. That is not bullish. I hate to tell you, but that is not bullish, and you got 2 green weeks in a row. What I'm tracking here, as you can see in the Hebrew Go Fuck Yourself 2024, 556 and 295. And what those numbers represent are 556 trading sessions since the SPX had a minus 20% correction. The 295 trading sessions since the SPX had a minus 10% correction. So all that we've got to do is add over here in the A column, which is the trading session number of the year, add in a 2 because we have completed 2 trading sessions. We are at 558 trading sessions and 297 trading sessions. We are going to be keeping track of that because we will be getting not only a minus 10% correction this year, but we will be getting a minus 20% correction this year. So keep on track with that. On to the spreads. Again, first day of the year, boom, very well. I have highlighted here because it was a Friday, the 59.50, 59.45s, which I got 2 messages, one from Nancy, I got another one from Al. After we got that move up to that 50-day moving average, up through there, 59.50, 59.45, using the 50-day moving average, and bang, got your close right there on the 50-day moving average, 59.42.47. We broke above the safe edge on Tuesday, first time, and I have to redo these numbers that I mentioned earlier because I had my rows hidden. So I wasn't counting the entire year of 2024 when I made that comment earlier about the safe edges both sides. On the upside, we had 28 times where we hit the safe edge. 17 of them we closed above. We had 35 times where we hit the lower safe edge, 20 of which we closed below. We had 41 plus 1% days. We had 35 minus 1% days. So it was nothing like 2023, but the numbers were still there, and the numbers still fit out. So anyway, that's what you got with that, and I bring you over here to the QQQ. QQQ as well, 2 green closes, or 2 green weeks in a row. And what? Come on, let's fucking call it a doji week. You know, it's less than a 1% move on. It's very close to a 0.5% on the week. 3 points the final week of December. Again, 3 points last week to close green. Look back at the last 2 weeks. 519.55, closed at 518.58. So over the course of these past 2 weeks, we are actually down. However, on the weekly candle, we are actually up 2 green weeks in a row. You can do the same thing over here on the SPX. SPX closed at 59.42.47. We began December 23 at 59.40.25. So on that 2-week candle, granted those were 2 broken weeks, we're up 2 points. 2 points over the course of 2 weeks. Not bullish, not bullish, not bullish. But that's what you got. Now this is where it gets interesting. IWM. IWM, you got 2 green weeks in a row. IWM, you got 3 plus 1% days in a row. So I went back there and started tracking the IWM to go back and look at the year. You had 94 plus 1% days on the IWM last year. 94. 78 minus 1% days. And let me tell you, man, these plus 1%, they're not plus 1% like you get over on the SPX where you're up 1.06, 1.1%. This thing goes nuts. 2%, minus 5%. I mean, you get some big moves over on the IWM. So that doesn't mean for those who have no idea about the IWM to, oh my God, I'm going over the IWM. You got to learn this thing, man. You don't go on Tinder, swipe, and then go on your first date and propose to get married, which again, I've got a clip for you at the end of this, which will not necessarily make you money, but it will save you hundreds of thousands of dollars. Because I know, based on statistics, which is the algorithm of the world, there is a large portion of you who are identified in this video at the end of the clip today. So this is the problem I have with what we're sitting with, right? Is we're right here at the 50-day moving average, 59.40. We don't have CPI until the middle of the month, January 15th. We don't have, what is this? This jobs report. We have the CPI coming out on the 15th. We have the full moon happening on the 13th. So I don't necessarily give too much credence to the "we are bearish" kind of view, despite what everything is showing us right now. Even though I still stand by my word, I am looking for us to get 56.50. That's what I'm looking at until I've been proven otherwise, and it'll happen this week if it is going to be that way. So enough with this garbage. Let's get onto the charts. And here we are with the SPX. So looking at the SPX from your all-time high, boom, 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 ABC going nowhere, and the FOMC catapult to the downside, right into that 23.6 retracement back to the April lows, 58.29.42, and ABC to the upside, right to that 60.40, which was the December candle. And this move down, zooming in on that move down, how we have two unfilled gaps above, and those need to be respected. It looks very clean, like a 1, 2, 3, 4, 5. 1, 2, 3 ABC. Looks very clean as a 1, 2, 3, 4, 5. So I'm putting an asterisk next to it for now, again, based on the timing of where we are. No full moon coming in, no CPI coming in. I'm going to put an asterisk on it for the moment and say, okay, we had our move to the downside. SPX is going to need to include this gap that was made, last week, over the weekend on Friday, Monday. 59, where are we? 59.50, 59.70, right up in that area, with the 50 retracement of the entire drop being right over here, right at 59.64.75. What SPX will need to do is break up above 59.80 in order to actually turn the hat over and start saying, okay, now we're bullish. But for the moment, being that we came right to the 50-day moving average, closed right below the 50-day moving average, this still has the warmness, and it still has a, fractional bit of odds in favor of the bears. So we'll leave it at that for now, as we still have a lot to be proven on that. Over here, again, looking at what I track daily on my personal chart, the move to the downside, right to the top of the unfilled gap from Donald Trump. Bam, the move back up to 60.40. Your gaps that are unfilled here below. And as we start to succumb to this with the gap that is unfilled below from Thursday, Friday, right there to that 50-day moving average with the bearish 20-day, 10-day, 5-day sitting there, and the 100-day being just below where the lows were there on Thursday, where the lows were here going back to December 20th. Quad OPEX, December 20th. Zoom out a little bit. I think this might be a little bit too painful for many of you. Oh, no, it's okay. But this is your bear line in the sand, this 58.68, this 58.45 region, right in here. As you can see, we came in here. This is our resistance going into middle of October. We were due after 50 plus years to have started to experience some pre-election volatility, and all that we could do was get down to that 56.98 area. This 58.68, 58.45 zone, this is where the bears start to take control. And starting to take control means simply that we can get down here into the 57.50s. We can get down here into the lower 57s. But we're a little bit too distraught with how long it took to get this dip going down. So the technical advantage is sitting there, like I showed for you on Friday, for the bulls. Coming over here to the VIX. And again, with the zoomed out version of the VIX, so you can see the FOMC, a little gap that was left unfilled up there in the plus 26 region. Zoom you in here to a 15-day so we can get rid of that FOMC. Can we get rid of it? No, we can't. So we can do it if we go on a 10-day, I believe. Maybe. Let's go. Come on. You should be ready with this. Anyway, here you go. We're not getting over 19. You got to get over 21. We're not getting over 19, which is why these 1811 visits are giving you your warnings that each time you're getting up to that 1811, you need to really seriously consider taking your short position off. Doesn't mean get long, but it does mean you need to really seriously consider taking that short position off. And as you saw here on Friday, you're crushed the VIX Friday. Fridays love to crush the VIX. 1794 pre-market as we came into the open and just absolutely faded, losing that 1706 mid-morning. And where did you go? You went right to that 1622. Now, wider version, again, wider version. Need to go a little bit wider than that. Oh, that's not going to work. That is way too wide. Yeah, that's good enough. I can go to the 30-day. We got gaps. We got gaps. We got gaps down here below. 1542 being your big warning that, okay, the bears have lost control. Then you start hitting into the mid-14s and the 14 level. After you get down below that 14 level, there's a big gap down there. A very big, large gap from way back here, back in the beginning of December. This is where you start shopping. This is where we went shopping when we first got into the QQQ puts. We went shopping again after we had this decline over here. I got into it on December 26th, and you saw those QQQ puts paid twice. So the VIX, we'll see what we got going on, but we are obviously constantly monitoring the VIX. And for those of you that day trade, none of this stuff matters for you. Just click the like button down on the bottom and go fuck off about your day, because we're talking forecasts of weeks, possibly even months going out in advance. If you're just day trading 0 DTE, none of this shit matters to you. All that you care about is where are we when we open up. So onto the QQQ, all-time highs. Ba-bam, ba-bam, ba-bam. This, again, it looks and it fits that we have completed this initial move to the downside. Now, we're talking only a fucking 34-point range. You know, we came down virtually just a little bit more than 5% over on the QQQ on the FOMC drop, then the bounce to the upside, and now you've got a pretty clean looking 1, 2, 3, 4, 5 with the ABC, ABA, ABC, and right back down to that 507.31 with a higher bottom, higher low. And where do we bounce to? We bounced right up to the top of that gap up there, just taking out that 38.2 retracement. So upside, yeah. The QQQ with no earnings coming out for another 2 weeks plus, we should start seeing a little bit more upside over on the QQQ. I would be expecting that we would be getting somewhere up here into the mid 521, 522 region, and everybody knows where we get short. So we're far off from that, but that's where we are sitting right now, and that's what looks best as we progress. Come over onto the bigger, broader, wider version of everything. We're done. It's done. You know, we've done all that was going to be done. Coming off of that low down here back in October of 2023 with Israel invading Gaza, we're done. We've done all that was going to be done from a being done point of view. Everything. Zoom out all your way to COVID. It's done. It's complete. Could be that we are into, like you see here, just into the 3 with the C equals A being there at 498. This could be our 3 wave. We get our 4 wave down here into the mid, lower 400s, and then we get our final 5th wave. Very fitting, and it fits as well from a bigger, broader time frame as far as this being the first year of Donald Trump. So a large decline, 539, 549, or 449, talking literally 90 points, 100 points, virtually a 20% correction, very similar to what we had here when we came down in August from the July highs. Very much do. Timing wise, it likes to dip in March. You don't have earnings until the end of the month. You start getting them in the beginning of February. You got the FOMC coming up, so should still be a progressive amount of time that we get. Over onto the Dow Jones. Dow Jones is it's a dead donkey. It's a dead donkey just sitting there flailing on the fucking ground with its wings cut off. 420 still holding. You don't get anything bearish on the Dow Jones. You don't get anything bearish on the Dow Jones until you get down and you start breaking down below 415. You break down below 415, you break down below 412, the bears start howling. They got something going on. But you're holding 420 right here. There's really not much going on, which is why you see I haven't posted any alerts out on IWM. Come over here. And again, this just absolute flail off, FOMC drop down, and the strength. You're holding above 220 for 3 weeks. This is as tough as nails, this IWM. But at the same time, like I said, you're not getting any kind of a breakout over here on the IWM, but you do have very good volatility within it. And because you have 0 DTE, learning IWM, following IWM, tracking IWM, this is a nice place to have a couple of $100 on every day. SPX, you're already doing credit spreads. QQQ, you're already killing it. When we put out alert switch, again, that 511 call trade, where are we on QQQ? QQQ, the 1 day, 1 minute looking over there on Friday. Yeah, so those 511 calls from Thursday that I posted in the room, should have threw it in the alert room, apologize for not doing it. We made it up to 519.65, so basic mathematics, 519.65 minus 511, $8.50 from $1.50. Pretty good return on it. So anyway, yeah, with the IWM, you've got nice volatility going on. You've got a killer little range. This is why the guys who spread on the Russell 2000 love it. And here you are. You've been stuck in that old 213, 220, or 2265 area. Looking good. 50-day moving average way, way, way upside. And that big 2288, 2288 threatening right up there in between. So there's a lot to be done. There's a lot to be proven. We still have a very big window, which is this week, of openness. Wide open. Jobs report, couple of Fed speakers, the FOMC minutes. We're in between lunar cycles. We do have the big cosmic event, which isn't for another week. So we're in the middle. We got DOJI candles over here on the SPX. You got DOJI candles over on the QQQ. So we're trading what's in front of us for right now. Having had those 5 red closes in a row, knowing that we would get the green close. We got the green closer on Friday. Going again and tracking back to those prior big, multiple consecutive red closes in a row, they have all been pretty indicative that you are at a bottom. So I caution anybody getting bearish at the moment, even though that's what everything wants to display. It's enough. Give it a little bit of a breather. Give it a week. We're going into CPI. We're going into earnings. We're going into the full moon. And we're going into Donald Trump taking office. So between now and Donald Trump taking office, I strongly suggest, statistically speaking, half of you get your shit together, or she's going to pack your shit.
1.4 million women in America do OnlyFans. 1.2 million is between 18 and 24. I decided to Google the number of OnlyFans workers. And when I tell you guys this number, I want you to remember sex work is an industry for young women. And so the majority of this number is going to come from Gen Z. I found out 1.4 million women in America do OnlyFans. 1.2 million is between 18 and 24. What percent of women, how many women in America are between 18 to 24? I find out roughly 10 million women. So just on OnlyFans alone, 10% of women in that age group are on OnlyFans. So there's only 10 million women between 18 to 25. Then I decided to think more about the consumers. Who is consuming OnlyFans? And I found out that 82 million American men subscribe to OnlyFans. Now, to think about how big that number is, how many people are in America? 165 million men are in the United States. And they're telling me that 82 million out of 162 million are subscribed to OnlyFans. Of the 82 million men subscribed to OnlyFans, 90% are married. And 87% of OnlyFans users are male, and 68% of OnlyFans users are white. So the average OnlyFans customer is a white married man.